So let's break it down, guys, in this collection of videos, how simple trading really can be if you just know some basics and what you're supposed to look for here. So this right here is a Thinkorswim platform, okay? Now there's lots of videos on this channel about how to build your own layouts, and there will be one included in this collection of videos that we're doing right now. This is a 1 minute chart. Down here is a reduced day chart along the bottom here. This is your active trader where you would take trades. This is your level 2 showing you the depth of all those trades waiting down in the market for you. And this has got a custom indicator, and I put this on down here. This is a 5 minute 10-day, which is very complicated that it's here, but I think since we're going to be jumping around to so many stocks, so I can show you about how to trade and how simple it really is if you start with the right strategy and you're careful. Now, with that in mind, you always should have a day trading plan. And in that day trading plan, besides the time of day you want to trade and, basic things like that, number one thing, maximum loss per trade that you're willing to accept. Maximum loss per trade. So when you enter a trade and the numbers start cropping up here, how much money do you have? And it's going to be red if it's down and green if it's up. You need to pay close attention to that, or at least have a notification set somewhere if you're walking away that the stock price has reached a certain level that puts you into danger. Now, if you don't know anything about any of the instruments on this chart, it's already too complicated for you. So I would invite you to either speed forward ahead on this or go to one of the other videos on the channel, Day Trading for Success, that this is being broadcast on, and look for how to build your own layout, how to use a chart, how to look at all the different ways on what a layout really is and what it means, because you need to at least know that, a little bit of that, before we go on. You might be able to follow, but we focus here on this channel on day trading, and you can see me mostly scalping, and you can see me in many mornings trading on live streaming. And you can follow along with me and try to make money. When I say that, I also want to say, remember, I'm not a licensed financial advisor, and you should always seek the advice of someone licensed before you try to emulate my style of trading, or for that matter, anybody's style of trading. Speak to a professional. Now, am I a pro trader? Absolutely. Do I make enough money to make a living trading? Absolutely, I do. So I do feel like I have something to offer here, many years of trading, but in the end, I'm not licensed to give advice, so you should really seek somebody who is. But what I really recommend is you watch myself and many other people develop your own strategy, kind of sift through what you want to believe or not believe, what works for you, and then come up with your own way of trading. And you might be the best trader out there that has not been discovered yet, honestly. So, then I still believe the best trader is out there and has not been discovered yet. So let's break into what I want to show you here. So on this 1 minute chart is where I would take my scalps. But if I was going to do a longer term, I would be looking at a day chart. Okay. Now on this day chart, you have what they call moving averages. This is a simple moving average of 50, and what is in 100 and a 200. What do those numbers mean? That means it's counting 50 candles, because each one of these candles equals a day. It's counting 50 of them, and then it's giving you the average exactly at that point. From all of these, taking the 50 back, which is somewhere in here, and saying, here's about where the price average is. This is taking 100 back. Here's about what that is. And this is the 200 back, and here's about what that is. Now, why does that matter? Why do you need to know the average? Well, just like anything, an average price of something, you don't want to pay more. You don't want, you'd like to pay less, but I mean, finding the average of anything. What is it somebody expected to do the 100-yard dash in? What is the average time? The average of anything you might want to come up with, right? That means the most people, right, do it. So knowing the average is really important. We're going to get into that a lot. So just that simple concept, which you probably knew, but just in case, average is where everybody congregates, right? That's the average. That's where most of it is. There's outliers, obviously, either direction. You need to know the average so you can decide if you're going to be an outlier going up or down based on that average regarding the price of something. So this is giving you the average. Now, with that in mind, you can see how they cross over. So when the 50 moving average were to cross over, and this is the location that would be at right here, right above where it crossed, that's the day that it happened. It's telling you that more and more short term, not the 200 term, 200 days that it counted back, because each one of these is a day. This is a day chart. Okay, right up here, D equals day. It's actually a day, and the time frame is 10-year, 1 day. So it's going back 10 years back, counting the days. If you pan, you can go back further, right? But we're at this level right now just to show you a basic concept of moving averages. It's so important to know moving average and just the concept of average as you're starting to trade. If you can zero in on what does average mean to me, it's half the battle of becoming a successful trader. Well, maybe not half, but a high percentage, 20%. I don't know. But it's just, you're going to see me use that. You're going to see me use half a lot probably. There's only 2 halves, right? But by the time I'm done doing this, there'll be 50 halves in my brain. But it's a large percentage of the time you need to know what the crowd is thinking. What is the average, right? Following the crowd is really important to diagnose how the stock's going to move, which way it's potentially going to move in the future. Here's an example. Many, many books have been written about this. When the 50 moving average crosses over the 200 moving average, meaning short term, it's showing you a direction different from the longer term direction. They call that the golden cross. So if we went right where it crossed over on this candle, it's basically saying, hey, it's going to keep going up. The short-term average says it's going up. Take the trade. Go up with it. And sure enough, there it went up. It climbed up. It climbed up. So this price here, when it crossed there, you look over to the right here, you'll see the price. Okay, with the lines, it says right there as it crossed over, it was $413.14. This is Tesla, by the way. There's the ticker for Tesla. This is an expensive stock. I'm going to tell you why I'm on these expensive stocks as we go on here. But where was the crossover? Was this it right here? I thought it was 413. I got lost. Oh no, right here. No. Did I just read that number wrong? Well, here's the crossover right here. Oh, I raised the candle up is what I did. So right there, I fouled that candle up. That's what I got, where it was. So that's the price right there. But here's where it crossed over, and then here was the price of the stock right here. So roughly 413. So now, where did it go up? At one point, it went all the way up to 470. That's a lot of money, guys. All right? 413 to 470, right? So that's $57, right? So $57, 100 shares, $5,700 if you had purchased 100 shares, right? You could have chose to ride it. But one of the other things you want to look at in all these books written about this strategy, as the 100 moving average comes closer to the 50, it's sort of signifying that maybe it's not going to have a long move, right? So this was already climbing with it. They were both crossing the 200. So see what happens as they grow apart. It's weakening the move. So, just by watching those 3 averages, you can take trades. And many, many traders, that's all they do. I don't know how many thousands, but thousands of traders, that's all they do. They call it swing trading or just trading. And they go in and they plan on holding it for a series of weeks or months based on these 3 moving average lines. When it goes the other way, when it breaks down through it, it's called the death cross, signifying that it's going to most likely go down. So when it breaks the 200 going up, it's the golden cross. When it breaks the 200 going down, it's the death cross. Here's probably a better example of it. It went down here, it went across here, it went straight down. Now, it's not going to be forever, right? So you have to decide when you take the trade how long you want to you just want to take your profit, right? So right here it was 263. It went all the way down to 225. So again, you have a massive profit. Even with just 100 shares, you have thousands of dollars in just that's like a week, right? So again, many books written about that. I wanted to show you why moving averages can be so important. Now when we annotate that to this chart, which is a 1-minute chart, here we have a 9 moving average and a 20 moving average. Much shorter term data, and each one of these only represents a minute. Now, a lot of traders won't trade on a minute. They only trade on a 5-minute, which is over here, and we'll talk about it, or even higher time frames than that. They can't stomach 1 minute. What I'm going to show you today is basically I'm going to cover those other time frames a little bit, but on Day Trading for Success, the channel that I live stream on, that you can join anytime, of course, we focus on taking our trades on a 1-minute chart time frame, 1-minute candle. It'll mark it on a candle, the price, how it moved. And when you're looking at a candle, if I go over this candle, look across on these lines up here, and it's going to show you things like the range, which is pretty important. And the market's closed right now. So I go over that green candle, it shows you 67 cents. All right, that right there showed 67 cents. That's from where it opened at the bottom if it's a green candle, and where it closed. And there's the high, the wick is the high, but when it closed. Again, there's a lot of videos I have that show you about this. I recommend buying books that show you details so you can look at the pictures over and over. The one I highly recommend is Day Trading Volume 1. You probably heard me talk about it in these series of videos. And it even has how you can join Thinkorswim, what's an average application look like, and so many details for beginner traders if you're beginning. But basically, these candles represent a minute. These are showing you the exponential moving average. Now, why that's different than the SMA, which should be on this chart as well. Yeah, there they are. These are the day ones. Because this is a 1-minute chart, they're just going to look like straight lines because the time periods, I don't want to over confuse you, but the time period's so short that it can't show you these kind of moves because it's right in the middle of a day and a minute in the middle of that. So it's just going to be a straight line, if that concept makes sense to you. But that's why you need, if you're trying to trade on averages on a 1-minute chart, you need much shorter term. You need them to be on a minute, not on a day. And these are set for on a minute and 20 candles back and 9 candles back, all on time increments. Again, as these start to come close to each other, it's giving you an indication of how that trade might go in the future. This smooths them out, meaning that these EMAs are different than the SMA. SMA is the actual average of price. EMA is predicting what it's about to be. So it's showing you a little bit of future by taking the averages, using a mathematical formula, and predicting. It doesn't change a lot from the SMAs, but it's a little bit. And traders like to use the EMAs a lot because they're trading in the moment short term. So I felt it was necessary to go over that basic stuff for you. So as I describe things, you have a concept of what I'm saying. So I'm holding down the control button and using my mouse to go up and down like that. And then I can do this to open this up wider. This is your volume down here. Now your volume is going to coincide with the candles up here, showing you how strong that volume was on here. And if you go over the candle, it's going to show you the volume of any given candle right over here. So let's take a look at that right above that. So that's 141 on that. That's a huge amount of volume in 1 minute, right? So that's when traders are trading short term, they're looking for spikes in volume like a lot of people. Volume meaning they're buying or selling, like they're entering the trade. It's how much volume is entering the trade. People equal volume. How many people are buying and selling shares? And then that volume rises the more people that jump on by purchasing, buying or selling a stock. And when when traders see a large increase of people being interested at a certain price range, whatever that price is at over here, then they're going, hey, which way is it going? Everybody's pushing that stock a certain way. Maybe I should go along with them. Again, an average. You're jumping on what the average person's doing. You can't count on it for very long because it's what just happened. It's not what's about to happen. It's happening right now when that volume goes up. So that could change in moments. But you can take advantage of right now for a period of time, sometimes seconds, sometimes minutes, sometimes days. So you just have to watch other data to see when it's no longer, going the same way it was. And scalping, 1 minute trading, like I'm going to show you today by going over other stuff, is really wanting to look at the short-term decisions that people are making that might rise that volume up or down. I don't want to overcomplicate it. This is just showing you how many people are jumping in and out. This is showing you as it moves, it would move, and this will be moving with it. Right now we're a closed market, but you should go and see some of the live trading archives, and you can see how it moves with it. And that's basically how price structure is going to be shown, and how volume and price is going to be shown on a chart. So you can, follow along with me now as I describe it. So, trying to figure out how that's going to move in the future is a lot of the battle. So there's many ways to trade. I'm going to show you today a couple of the basic ways that most people trade, but I'm going to center on what I believe can make you a profit every single day if you follow your day trading plan of a maximum loss per trade, a maximum amount of shares that you would go in. And that might vary depending on the price of a stock, the more you can afford, obviously. But I switched over to what I would consider to be a momentum style of trading. And how I did that is I have a scanner reading here, and I went down to one that actually moved pretty good. This moved 42%. Today. I mean, we're bigger ones, but this one actually price-wise didn't move as much. So I showed you one here that you would see that a lot of traders would have jumped on to make a lot of money. So let's take a look at that in that style of trading, which is basically, you're not necessarily looking for a dip, because one of the other ways of trading is you look for a dip in the price and then you buy it and ride it up, right? And then you get out. When do you get out? Who knows when to get out, right? It's so much easier to call it when you see the finished move on a chart. It's really not fair, right? Because you get to see what happens. But if you're in the middle of this trade and it starts to go up and then this happens, you think it's over and you get out and you barely made any money. But what actually happened is it was barely up there yet. And then constantly it would fake you out like it's over. I better get out. It got constantly. It's very rare that you get a parabolic movement in either one direction down or one direction up. There's usually this back and forth because the buyers and the sellers are fighting constantly. So you're having to figure out, is it a shakeout, fake shakeout, or is it really shaking you out of the trade? And as you get more into trading, you can figure that out. But momentum trading is very, very difficult. It's one of the most difficult ways to do short-term trading. You'll see a lot of people online showing you. Some will actually show you live trades. Very rarely. Most just show you, hey, here's what happened. So you don't really know if that's what happened, right? But if you get to some of the traders that show you live trading, you can see the struggle and how difficult it is and how good they've gotten over the years and how many hundreds of thousands of dollars have they lost before you got there. So I don't recommend this type of trading to anybody. I do it. I would not do it on this platform because it has a lot of glitches. And I have many stories about that in different videos. If you want to watch it, watch them. But it is a style of trading that people do. And if you look at it, because this stock is really, the value of this stock is so inexpensive, $1.57 right here wherever it closed. This is in the middle of the day. I picked a spike here, but that's the price that it closed at, was $1.57 or $1.67 on market. Well, let's just look at this spike early in the day, because this probably would have got a lot of people. Here's to get in to make money. Here's where it started, right around 10:30 a.m. on East Coast United States in the New York Stock Exchange, right? People's scanners started to pop off. They probably popped off over here even at 9:47 in this area. Let's take a look at this one. There's the price of the stock, $1.28. When the scanner probably kicked off, or $1.27, right? And you saw this spike and it kicked off. And maybe you bought here and you put in, let's just give an example. You put in 1,000 shares, right? A lot of people that trade this kind of trading, since they can afford it, they might put in 10,000 shares, right? So 10,000 shares is $12,000 of value of this stock. And how do they get that? They margin, right? They could really be, well, I mean, if you made the PDT rule, which you really would have to have, $12,000 is nothing. You know, it's nothing to invest that kind of money in this style of trading. But you've got to keep in mind that, you know, there are 12,000 shares. How every penny, you know, if it goes down $1, that's $12,000 you've lost. So this is but the momentum traders take that kind of risk, and they do it all the time, because that means you can make that much money or more. Let's just say that they stayed in this move, right? It didn't get shaken out here. And they had, let's just say they have 10,000 shares, right? And they go from $1.27, and then somewhere in here they decide to get out. So now they get out at 20 cents up with 10,000 shares. Okay, so you know they've done quite well. In fact, they made $2,000 in just a few minutes, right? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Basically, 12 to 13 minutes, they just made $2,000 with 10,000 shares. As they put in 20,000 shares, they've made $4,000. And then they go throughout the day, they do this kind of trading. Like, let's take another example, $1.36 all the way up to $1.82. So they've got, let's just say they did 50 cents. Okay, somewhere in here they got. So they did 50 cents. Well, they would have had to be perfect, but let's just say you did 50 cents. So you're basically making, for every 1,000, you're making $500. Well, I'm sorry, I have to get the calculator. Let's just do it. So 0.5 cents times 10,000. Oh yeah, so that's easy. Yeah, 5,000. So $5,000 on that trade all the way up. So, but if they did 20,000 shares, they make $10,000. Now, you can see those momentum traders make $100,000 in a day on a regular basis. But keep in mind, it can go the other way and blow out your account in just a few minutes. So it's really, you have to really be a professional. And this is, a lot of people will suck you in to buy their courses and things. And honestly, guys, you have to be trading for many, many years. The course is a waste of money, in my opinion. No particular person I'm talking about. My opinion is you don't want to go investing in stuff like this, because it's just like, you can watch a video about heart surgery or read a book about heart surgery. That doesn't mean you can go perform heart surgery, right? So it's, and I kid you not when I say it's probably close to that complicated to make that kind of money doing in what they call momentum trading, chasing a stock higher and higher and higher, and knowing when to add and get out, and multiple ways to trade that. So that is a way of trading. And when we're on this chart, the other way of trading, of course, is to buy the dip and then get out when it's higher. You know, again, buy the dip, get out when it's higher. How do you know if that's the bottom, or the dip's going to keep going, and when it's going to go higher? Well, you don't know. You never know that. You, again, look at the averages and all kinds of indications, which we'll talk about, to try to decide to make it easier and easier and easier to do that. But even with all those in mind, buying the dip is a pretty risky strategy, and you need to be pretty good at it. It is going to be a bit of what the strategy is that I'm going to show you, that I think is more for beginners. So that's why I'm kind of giving you some background. Buying the dip is involved in the strategy that I'm about to show you here, that I recommend that you guys try. So momentum trading can be extremely risky, much more risky than buying the dip. Getting enough data to buy the dip. When you're momentum trading, like I was just showing you, and you're trying to figure out when stock's gonna move up or go down, a lot of it's based on reading the level 2. And obviously you can use some historical data and check about the company and its fundamentals, and then what is the catalyst or news event that's making that move. All those things come into play, but it's all about really reading how fast this is going to move up and down so fast. And usually what happens is when you see the price freeze on your level 2, and this is fairly advanced for the people that are watching this that aren't used to trading, you'll see that these two, the price won't move, but the volume will spike up, and basically the price are going back and forth within just a penny or two, just back and forth, because the bid and the ask are getting filled just instantly, and you're waiting for all these shares to be bought up. And when you trade something like we were looking at a minute ago, there might be 10,000, 20,000, even 50,000 shares. You're waiting for them to disappear off the level 2, and then it's spinning up, it's winding up. It's, say there's 50,000, it goes to 40,000, 30,000, 10,000, 5,000, and it's about to pop, and it's going to jump one direction or the other based on which side that those shares are being eaten up on, the bid or the ask. And then it's going to spring up or spring down, and that's when you jump in to the trade. So that is a real skill. And it's, not a lot of people. Some people are very good at it, but 95 to 99% are not good at it, and they lose everything they have. So again, my recommendation, and all my recommendations are from somebody who's not licensed, that you should, it's just my opinion, basically my recommendation, is to not even get involved in that till you're way further along in your trading journey. And then you might be that guy that's so good that can make hundreds of thousands of dollars, but you don't want to count on it. So back in 2022, a group of professional traders got together. They're all wealthy, and they were watching successful day traders, and they were watching the momentum craze take over. We're in the heart of COVID now at this time, and they wanted to come up with a strategy that was much safer, that people can consistently make money. So rather than be the hare, you're the tortoise, and you win the race as the tortoise. And it's slow and calm, and the risk is much less, but yet there's a way to become successful. So they work together to try to figure out what is a potential strategy that even new traders could get involved in and not get sucked into losing their house based on these momentum style of trading that everybody was promoting so highly to sell their courses, right? And it's not that they're fake, right? It's just that, and how do they know whether you're going to be that guy? Do they just assume you're going to fail? No. So you can't be unfair to them if they want to sell a course that shows how to do it. Maybe you can do it, right? You could see the logic in their head, or their motivational speaker speaking to them. Well, how do you know everybody's going to fail? You might be talking to the guys that are going to make millions of dollars, so tell them. So, but most don't. And so having something else out there that the majority can succeed in is what they were looking for. It took a little while. You saw me cover a lot of it on this channel, because it was through the $1 Million Margin Club. What were those people that could margin up to $1 million, what were they figuring out for your average trader? Well, they came up with a plan, and they came up with a book that was called Day Trading Volume 1. So I'm going to go ahead, and this is not a whole big promotion for that book, but it's something about, I'm going to show you this strategy, and then I'm going to take it further, what's happened since the strategy came out. So it's worth a listen. So first, let me show you their promo video, which is, where did it go? I think it disappeared on me here, guys. Hang on a second. So this is clearly going to appear to be a promo for the book, And it's a best-selling book for a reason. So to get out all this information quickly, this is a commercial that they released, and I just want to play it here, and then I'll stop it before the end of it, or maybe at certain parts in here, so we can talk about why it's so important, because it covers so much in like a minute and 42 seconds. So this is faster than what I can do, and then we're going to jump into detail about what really it's about. So here's bear with me for a minute and just listen to a commercial.
No strategy, no chance. Day Trading Volume 1 is how beginners become pros. Inside, you'll see real-world setups, practical tools, and step-by-step training, not just theory. Here's what's waiting for you. Learn range-bound trading strategies, channel trading, scalping, shorting, how to get a broker and guidelines for choosing one, margin versus cash accounts, cheat sheet for the questions they might ask, understand market, limit orders, fees, and more, approaches to risk management and keeping emotions in check while trading, learn simulated trading, understand 10 key signals that can improve your entry decisions. Learn scanner settings to find the stocks. Explore tools and techniques commonly used by experienced traders. Learn studies and indicators. Average true range levels. How consolidating stocks are identified and potentially traded. The 10 important candlestick patterns you should learn. A sample.
Okay, so I'm going to pause right there for a second because this shows a day trading plan. But no doubt, as you can see, all the stuff that's in that book and how it was put together by a group of professional traders that really knew what they were talking about, why it changed everything. So we're going to go into that strategy that it's promoting, which is a range-bound mega large cap strategy based on a market cap of $25 billion or more. So basically, you don't really even need to know what that means other than it's big stocks, right, that move slow like the tortoise, not the hare, that you can count on their movement within a high range and a low range. So that's what's so important to remember, right? So here is an example of what they have in the book, which I think still stands the test of time. You know, trading hours that you want to pick. This is when their strategy they recommend. Although if you watch me live, I'm doing the Scalp and Recoil, which was originally based on this strategy, but I'm starting to find that coming in a little later, it's even more consolidating, like at noon, and it's better for the Strike and Recoil, and we'll get into that later. But you know, you might want to have the range of a channel, and we'll come back to what that really means. But it's basically, you saw those SMAs, you saw I talked about the golden cross and the death cross. You know, they make a ceiling and a floor. And that's basically what a range is. So we'll talk about that a little bit more. Your share size, the goal you might want per trade is very conservative here. Daily goal, $200 a day. That's $4,000 a month, people. Life-changing, trading just an hour a day. Maximum loss per day. So I wanted to stop right there just so you saw what a trading plan looks like. Let's go forward a little bit.
Of a day trading plan. Learn how to draw support and resistance levels.
So there's what we just talked about. I hate to make it a giant commercial, but it covers the stuff so much better than I can. So based on historical data, you look for where stock price, remember these candles are showing you the stock price over here, how they move. When it stopped abruptly and turned around, stopped, consolidated and turned around, stopped and turned around. So by marking those areas, they're most likely, not always, there's a good possibility they're going to repeat. And that's called historical data. You're marking something that happened in the past. It's data. And you're making a note there. Now, you might be able to remember it mentally, but it's obviously a lot easier to draw lines where stocks consistently consolidate. So you go short, long, short, long, short, long, meaning you take a short or you go a long trade, or maybe you just wait for the bounce. How many times did it hit that level? And you're going to find this over and over in this strategy I'm about to show you. That, remember, I'm not selling you a course here, guys. I'm just telling you like it is, okay? Go and look on the chart yourself. We're going to look ourselves here with different stocks, but I'm trying to get through this as quickly as I can because it could be a 50-hour video. I'm trying to make it much shorter. But so support and resistance levels, finding them, learning to see them on a chart, very important. And they have specific ways in this book that is great for beginners to start.
Examples of how to mark Fibonacci retracements.
Here's the other one, Fibonacci retracements they use, which are always marked left to right. There's a low, here's a high. It could be low to high or high to low, but they're always marked left to right, where you're looking from a certain time period from the high and the low, and then you click, you left click it, drag it, click it again, and then all these levels are going to open up. In this particular strategy, they're support and resistance levels. They're creating channels. Now we're going to go into a little bit deeper, but I don't want to overwhelm you. Really, the things that you need to know for this strategy are pretty basic, but if you've never traded at all, this seems Fibonacci. What the heck is that? That's a big word. So it's just not, as you start to get into it, it's just not that hard, guys. But it seems like it in the beginning.
Levels. Learn to identify and mark historical data levels. Learn the value of studies, tools, and indicators such as the VWAP.
So that VWAP is not on the chart yet, but we're going to do it on the chart, and that's the volume weighted average price, meaning what is the value of that stock at any given moment that the big traders see? Like, that's the value. That's what it says to do. It's worth $219.24. If you pay more than that, you're paying too much. But of course, if you have data that it's about to go up, when are you you can't always jump in at the bottom, right? But this is an important indicator, and we're going to be using it.
SMAs, EMAs, the volume profile, the Scout Meter Pro, level 2, time and sales, RSI, and the ADX. Detailed examples and analysis of trades taken.
Yeah, okay. So we're going way too far into this, so I don't need to show you the whole commercial. Oh yeah, this is what I wanted to get to. So rating your stocks that are best to trade, and it has guidelines. And what it's trying to do, and you need to create your own guidelines, and we'll show you some. Now, this book was put out in 2022. The markets change a little bit. And some of these things you might have a really hard time finding a stock if you try to follow all these. But if you can, you're most likely going to get a stock that's going to be easy for you to trade. But you're looking for an ATR that's greater than 5. What is an ATR? That's the average true range of a stock, the price of a stock, how much that stock moves. Like is it going to move between $1 and $1 and $10? So you want it to move at least $5 according to this. We'll go into ATR in more detail. You want 5 days of alignment, meaning you go back on a chart and you look, are those candlesticks all aligning within the current ATR high and low level? It's getting complicated here, guys, but there's just like 5 or 6 things to learn, and then you can just apply the same stock to the same stocks you find day after day. Do they fit? Then the Fibonacci level we just talked about, you don't want a news or a catalyst. You don't want to trade when options are closing on a Friday, because you don't want anything to affect that tortoise, that slow turtle moving. You just want it to stay a high and a low. You want it moving right in between. I call it a snake sometimes. Just snakes along, moving. That's what you want. You don't want big jump outs. Great. If you catch it right, maybe you make a big move and you make lots of money, but you don't know how long it's going to last. It becomes almost momentum trading again on a big, expensive stock. So you don't want to look for things that are going to be outside the box. You want just a steady flow. That's why pre-market, you're looking for a consolidating pattern where it's just staying in a range. You don't want big spikes up, big spikes down. Then it's the volatility of that stock is all over the board. How are you going to be able to call it when you trade? You don't know what's going to happen. So, the reality is we don't really know what's going to happen no matter what, but the more signs that it's just steady as she goes, that's what this whole book was that these professional traders put out. And it changed everything right in the middle of COVID, where a lot of retail traders were coming in, a lot were losing their butts, and something had to be done. So this strategy, and I'm sure you can find it all over the internet, is really something that changed a lot of things. So again, these are all the different things you look for: your channel size, support and resistance levels that you want. You could try to find 15 or more is good. Let's play the video here. You want one that at least one of today's channels was tradable yesterday, the day before.
Checklist. Day trading volume 1 started it all, and its success was followed by the candlestick pattern playbook, over 60 patterns with accuracy ratings. Volume.
Yeah, that's really cool too. Not to do a more commercial, but this is the only one that rates the patterns. We're not going to get into patterns today on this. At least on this clip of the video. And then it goes on with games to help you learn it. And then the next one here,
filled with challenges to improve pattern recognition. Volume 4.
This one, it changed everything too, because it shows how to trade the open, and many traders, it shows the 4 most common breakout levels at the open. Again, not something you need to understand right now, but when people are trading the open, they're looking for a level for this price to break out of, and that's sort of momentum trading, except it's not on a momentum stock, so you're not expecting it to keep going. But when it breaks out, that's a signal like you have an opportunity here. So this talks about the 4 breakout levels and how you might trade them. Another good book. Actually, we'll stop there because I'm not doing a whole. It gets into indicators and stuff, but that's sort of what I'm going to be showing you based on the strategy that we're going to break into some $25 billion market cap larger stocks. Not a mystery. It's just stocks. And some of those stocks are going to be on this scanner, which is basically my large cap consolidation scanner. NVIDIA, Tesla, Google, Apple, AMD, Palantir, Hood, Amazon, MU, Microsoft, Intel, and Iron. So these are some of the ones we're just going to look at today that might hit the scanner that could be traded like we just looked at that criteria at any given day. Now I do custom code scanners that help a lot. This is basically a watch list though that I just come back to regularly, but I do have scanners, and there's lots of videos about that on the channel to see that, or go to the $1 Million Margin Club. So that's the ones they're going to be covering today. So let's get into how you can, the simple part about how you can trade these stocks and how you see the signals. I'll show you right here how you could see the signals if you followed the basic strategy of consolidation, not breakout, not newsworthy momentum stocks, just consolidation, how they present themselves over and over again, and why it's so safe is the larger the stock, the more expensive it is, or the larger the market cap, more expensive, the more you can rely on it steady as she goes. So you don't get into too much. It helps you from not getting into too much trouble, because most likely it's going to retrace whatever it, if it goes down one way, it's going to retrace back up. If it goes up, it's going to retrace back down, because it has to in order to do that steady flow. It's going back and forth, back and forth. When it breaks out of its average true range, that's when you need to be careful. It's no longer going to trade like a tortoise. It's going to be more like a hare. And you might be lucky to get that breakout and it just keeps going. The problem is you never know when it's going to stop. So when I do those breakouts, when it goes past, I just take trades all the way up, say it's an upward breakout. I would just, as this broke out, you can see, like, we're not really talking about this right now. This is the 100 moving average. See how that it respected that? Remember we talked about SMAs? Here's an example, all right? Perfect example, right, of this day. Here's your 50 down here, not too well respected, maybe tapped a few times here, but your 100, you don't know for sure what's going to happen. I think there's a 200 here somewhere, right? Yeah, way down here. So it didn't come into play, but look at that, right? But back to what I was saying, as it's going up, you see how it's not just, it's going to look like it's going to go back down all the time in real time. It's real easy in retrospect to look at these. But if you were taking that trade long, you could have just as easily got caught up in that and been lower than when you started, right? So what I always preach in what I trade is I'll take it going up. When it shows signs of it's going down, I get out, or I'll go short. And then when I see signs that it's going back up, it's broken a level. Like say this was your ATR, because it's not, it's your 100 moving average. So we can use it like an ATR. It's possible that the ATR is right here. No, it isn't, because they're down here. I can see on the 5 minute it's set here. But anyway, then you can bank the money as the shenanigans are going on, and you can ride that trend. Look what happened here. Another little trick, and I might cover it in other times. Really, the last 15 minutes, I wouldn't say half hour, but the last 15 minutes, whatever direction the stock starts going, it continues to go. That's a trick. Not all the time, right? Not all the time. But the last, 5, 10, 15 minutes, It's a good thing to try on these large mega cap, over $25 billion market cap stocks. They seem to do this over and over and over again. Open up the charts, look at the stocks yourself. What an opportunity is, right? 5 shares, 10 shares, whatever you can afford, in your account, and just make $100, $200, $500. But again, pointing out these kinds of things is what I'm going to try to do, because this channel is dedicated to ways to help you make a living. You need to find the best way for you, and you always have to remember that nothing's for certain. Nothing's going to be, absolute. So you have to have that max loss and get out, and then live to trade the next trade without saying, oh my God, my life's over. I can't trade. I suck. What am I even thinking? Why did I think I could do this? Main thing to remember, guys, stick to your max loss. And if you have, like I usually would tell people, if you have 3 bad trades, particularly in a row, you need to stop. You need to walk away. Probably stop for the day, but come back. Something's not right up here. But day trading plan. And we'll talk about that a little bit more too. But let's go ahead and get into really looking at these individual mega and large caps. How would things work out for you if you traded something like Day Trading Volume 1 or some sort of facsimile, a spin-off more that's a little bit more for our current market in 2026 is when I'm making this video. So I've opened up a 5-minute chart here, and I put on a custom indicator here because this is just going to make it so much easier. You don't have to have this. Okay, how you would figure this out on your own, and this is your average true range. So let me go back to the day chart, and I'm gonna expand in on this area right here, and you need to know what the average true range is. So if you go over the day, well, that's the day that just happened. But if you go over the day before, which is right here, and you look at your average true range, which is Wilder's mathematical formula based on a 14-day average. You see it says $5.79 right down there when I go over that candle, okay? Now, if you want the full range, which you should have marked, you go to where the candle closed, which on a red candle is the bottom, and you add $5.79, and you draw a line, right? And then that's to get the high from that close. And then from the close, if you want the low, you do it this way, $5.79, and draw a line. And you end up with a high and a low ATR. You can mark a high and a low. If you want to do what was Day Trading Volume 1 figured out, is basically, even though there's a full range of that amount, it might not make it to the top of that range. In fact, it might move that amount of money, but it might go half up and half down. So it came up with the concept and then back tested it. And it's not like it invented this. Traders were doing this stuff, right? But it put it in, they put the pen to paper and put it down so people that didn't know about it could learn. So then you would just divide that ATR in half, right? Whatever's over this candle. So you say $2.85 or whatever, and you subtract $2.85 from the close to get the low, and you add it to get the high. Now you've got half the ATR. So what this indicator did here on the 5-minute, what it does, and it's at the $1 Million Margin Club, which I think they have the best ones, all approved for Thinkorswim, all work flawlessly on Thinkorswim. This is showing you them. There's the top, the whole amount. There's the half amount, which is more respected, as it turns out. It seems to hit it and turn around more often. And when you're trading, you want to take a note of that. As you can see on this particular stock, it broke out. It broke out, and now you have more of a momentum. You have more of a hare type trading than a tortoise type trading. However, you can use other ways to trade this action. It just would probably be one that I would reject if I was you, to be a more tortoise type of trader. I'm trying to say. As you can see here, it respected the 2 lines here. It actually hit that half ATR. It was already above it on. This is the gray is pre-market, right? And this is the open session, the live session, starting at 9:30 a.m. here. So it did go down, went back and tested it, they call that, and then broke out. And you would definitely have this on your trading the open strategy too when something like this happens, but as a breakout. But then you'd have to do what I was talking about a minute ago, like, hey, when it starts to go against you, bank it, you know, and then think about getting back in again. I can't help but point out something that's really a strong thing to look at. I said I wasn't going to talk about patterns in the candlestick pattern playbook, but this is an amazing pattern on a 5-minute. What they call this is a bull flag, okay? And this is the pole, and the red candles are the flag. So you typically would draw a line right here. If you were trading this on a 5-minute chart, you would block that out. The second green candle after it breaks the flag, you go in. It tells you all this on the book. And then 82% of the time, it will go the length of the pole from here, the bottom of the flag, down. So we're basically saying 179. Let's see how it did. 179.50. The pole started. You could say the pole either started there or here, but let's call it $3. Okay. So this should go $3 if it followed the 82% accuracy. But either way, it's going up, right? So 179.87. There it is, guys. Exactly. Just like, it's like, you know, there's a reason why it's 82. I didn't know it was going to come out that good. But so, yeah, that's a great book to get to. That's almost kind of funny. That was exactly $3. But so, I mean, I could have manipulated that to make it better, but that's not what I did. I had no idea. It didn't matter to me what it was going to come out to. But anyway, so this way you'd have to trade more like a hare, right? You'd have to bank it, ride it up, and then probably bank it, wait, and then when you see the second, like a real move back up, like you probably would have marked that level that it stopped dead, made what they call a flat top, wait for the flat top breakout, and then get in somewhere. You're not going to get the perfect place every time, right? You're going to leave some money on the table because you don't know what's going to happen here, right? But if you're trading in a 5-minute, again, amazing, easy flat top breakout trades. You get in somewhere in here after the 83. We haven't even talked about even in whole dollars because this is at 82.93. I marked it, but at $83 as it broke it, the even dollar, whole dollar, I would have jumped in if it was me. And then you see 83 and you go all the way up to 84.9. So you make $1. 100 shares, $100. You know, it just depends on what you know, how you're trading. You know, 200 shares, $200. If you're on margin, you can do that, you know, because you need 25,000 in your account. That means you have 100,000 to trade. Easily be able to afford that trade, no problem. Okay, so if you can't, if you're doing, you know, then you just do 10 shares or something. You know, you do what you have to do. And if you've been following the news, and probably you might be by the time you watch this, they've lowered the PDT down to like 2,000. We're just waiting for the SEC to approve it. But that's just an example on how you might trade that when it's broken out and you're trading the hare strategy, which is, again, not the strategy that I'm trying to promote here that I think is safe. So NVIDIA isn't a great example. As it broke out of that, I would have moved away from it. You actually would have never seen me trade it, most likely, because it broke out too quickly. I would have not even gone into this till like about 15 minutes after market opens. Let's look at a different one. So I'm using this scanner. So I'm going to go ahead and click on these. It's linked. So we'll go to Tesla, much more expensive stock. It's thinking. So let's see how it did on the levels of the only levels we have marked right here. And we're going to stop after this one and mark more things. So this broke out immediately after this level, so you call it a breakout, retested. Now we're getting into another strategy here, so I'm over confusing. This is called the escalator strategy, where it retests and goes up. But you can see it has resistance on the ATR high. So if you came back later in the day and you were doing the tortoise type strategy, a consolidation type strategy, scalp and recoil, or all RV, whatever you want to call it, you have some consolidation in here. Now this is on a 5-minute. We're going to look at a 1-minute to really zero in on these, but I'm just trying to get you the overall, I'm calling it the tortoise point of view here on these. We're going to Google now. So Google used the low ATR for resistance, broke out here. Now, since the strategy was developed back in 2022, the market's changed a bit where during the current politics of the country, nobody can rely on anything. So and it's just terrible. I can't stand it, what's going on, but we got to wait it out, I guess, until we get, cooler heads controlling the market. I'm not going to get political on you, but it's very hard to count on anything. What you do see here on Google, though, on the 1 minute is the 50 moving average, which wasn't marked on the 5 minute, which became very, very, respected. So now that you see how we're looking at the ATR level on the 5 minute, let's do some other stuff on the 5 minute that it called out to do. Let's just start with Google, okay? And we're going to do the Fibonacci levels. What is the Fibonacci level? They call it nature's mathematical formula, right? And basically, I have it on my tool. I put the tools up here. This is how to do it. Build your own layout. So I'm going to click on Fibonacci, and then I'm going to left click on the high. So it's 349.75. I look over to the right to get that price as I move down. There it is. I click it. I let up the button. I'm dragging down to the low. 306.46. Oops, I was there for a second. So sensitive, guys. There we go. So now it opened up nature's mathematical formula, meaning like how many rings on a tree does it repeat, and so on and so forth. Now, this is part of the strategy for large cap traders to narrow down their channels. And what that book called for, and what a lot of traders did before that, is they let's just because I might do this more often, so let's just customize the grid here and add another 5 minute down here. I want a 5 minute 2 day clean. Here it is. Okay. Now this is a 2 day, 5 minutes. So they say market on a 10 day and a 2 day. Now you're going to have a lot of levels here. When I do that, it's going to look really confusing. But when you zoom in on a 1 minute chart, it's not too confusing. So the levels are different, and it's going to open them up in different areas anyway. So let's start at the bottom. This is low to high now. So that's at 50 cents. Now, a lot of times I will do that. I will make the $0.50 in this one, really, I would make more at 334. We haven't talked about the even and $0.50 yet, but they're really, and whole dollars, I guess I should say, they're really important to think about. So I'm actually going to make that like that, and I'm going to make this a different color. We're getting a little deeper here, guys. It's probably getting more confusing, but let me get this here. All right, so this is how this day would have ended up here. So let's zoom in. I don't normally trade Google. This is where I ended up to show you guys. Is there data on the 5 minute that helps? Well, look at that channel. That's a pretty good channel, right? Let's go over and look on the 1 minute, though, because that's where you're going to be trading and see what it really showed us here. How often did those levels get respected? We have this amazing 50 moving average. Look at this, guys. Look at how it rejected. That was an easy trade to call. This one very similarly. This one too, when it doesn't make it to the top, you jump on as it starts to go down. You know, this one hit the other fib. I mean, this one, again, it didn't go. So somewhere in here, you realize it's not going, so you got to jump up. This one exactly, you know, this is not where we marked this, right? This just happened here. So, but you know, this, and then you probably end up marking historical data here, so that if that ever happened, you know, while you were live trading, you would do that. And then when it happened again, you'd know, like, go short, you know, it's going to reject. Or if you're going long, like, get out. So it's all about marking your historical data levels. I don't want to over confuse you, but the fibs, so many people mark it. Now I'm going back to trading with the crowd, right? So many people mark that level that it becomes a self-fulfilling prophecy that everybody reacts the same way. I had somebody ask me, that used to trade us. I'll point out she's 90. She's 90 years old and used to trade stocks a lot. And then as I was explaining, sharp as a tack, as I was explaining this type of trading, she says to me like, well, how do you know that it's going to stop at those lines? How would you even, I mean, the concept of that is unbelievable. That's back when she traded. You had to call in, use a broker, and her main thing was, how do you get the trade filled? We had to wait hours and hours to get the trade filled. Thank God we don't have that anymore. Now you can take the trade yourself, and because of the liquidity, meaning the amount of volume in the market, trades get filled instantly. Maybe not at the exact penny, but pretty darn close, right? So we don't have to worry about that stuff she had to worry about. But the way I answered the question was, it was earth-shattering to her, was we make it stop at those levels. The traders make it do it. That's it. There's no puppet master. There's no mystical thing. Now, there is manipulation in the market, of course, where you'll get the big players come in that spend, millions and millions of dollars having the smartest minds in the world program algorithms, and then they'll dump millions of dollars into one trade to affect the movement of a stock because they're going to pick up all your stop loss. Again, getting more complicated. So you have to watch out for that. That's why doing this was taken into account by the professional traders that designed sort of the RV. I'll start saying RV instead of tortoise. The RV strategy, which is tortoise, the slow moving strategy, but yet in a 1 minute chart, you get out at your max loss. So those algorithms that are manipulating the price, you just get out and you get away from that stock. What's going on there? That doesn't even make sense. Get away. It should make sense because the crowd, you and many other people that are doing the exact same thing, are affecting this price. You're making it do what it should do. And the more people that know, the more it does exactly what it's supposed to do according to these levels. That's it. Not rocket science, guys. Not rocket science. Couple things to remember. You can't actually see the future. You only get to see historical data. Why would that help? Because everybody does the same thing. Two basic things. That's it. Not everybody. I'm generalizing, but I can already see the chat coming in. Just like, no, what are you saying? Don't ever say ever. Don't always say always. Yes, guys. I'm generalizing. I'm taking license with how I speak, so I don't self-correct through this entire video. But yeah, we know what's going to happen if we have half a brain. High likelihood. When I trade the scalp and recoil, guys, you can watch me. When I trade the RV, I'm 90% accurate. When I trade the scalp and recoil, I'm 85% accurate. I haven't talked about those strategies yet, but I personally see it happen time after time after time. Come on with me and trade, and you'll see on a live stream. You can see real time, no shenanigans. What's going on? You can see it going down. You can see my accuracy. And you can learn about some of the tricks I do too to trade. Okay, enough of that self-promoting commercial here. Let's make sure you make money. So you would mark levels like that, like I just did, historical data in the intraday as well as the past. But what you would also do is you would mark it before you start, right? And the strategy calls for that. Let's go to a different stock. Let's go to Apple. And now let's go ahead and put in these ATRs so we don't have to keep, because we haven't even taken into account where those are on the 1 minute chart. So this means MMC, $1 Million Margin Club. Remember, I'm a coder. You may see stuff here that hasn't been approved by Thinkorswim yet, that I'm being hired by prop firms to put out. So don't get all mad and make phone calls. But he has it, because I code for Thinkorswim. So you're going to see stuff that isn't even out yet. But this is the high, low, let me see, multiple range. I'm looking for the multiple range, and we're going to do it without labels so it doesn't get complicated at the top of the screen. When you get these things, you get many versions of them. So I'm going to go ahead and do multiple range without labels. It's going to come in over here now, okay? I'm only doing that. You don't have to have it, so I don't have to do the math on every single stock. And now we're on Apple. Let's open up the 5-minute over here. Oh, let me do it on the 10-day. 5-minute 10-day over here. And auto zoom. And let's go ahead and do, well, first of all, let's just see how we did here. Okay, so you can see it broke out. It came back. We don't have any other levels here. Let's see if the fib did it. So this is a consolidating type way to trade, but you can see we don't really have any good levels here. We don't have enough to take trades. I mean, you could have done it right around here for sure. You can see, again, here's that hole wherever it goes a certain direction. You can usually go that direction. This is on a 5-minute chart. So you would want to get out. Oh, see, because it hit the ATR. There's an example of, I talked earlier about, hey, the last 15 minutes go the way it's going. And then if there's an indication that it's going to stop, then believe it, because you're already kind of taking a chance here on this. Kind of always happens, but you can't count on it. Kind of always, you might be a winner, right? Let's see what happens if we go ahead and fill in these fibs that so many people do. Now, I can't mark the high there because that day wouldn't have happened yet. So probably the high is going to be right around here. Let's find the low way back here. It's going to take a minute. I'll drag it out here. 28. So I would go to the 48. I would go to the even dollar. Close enough. Remember, now these aren't, you're not going to take a trade at the exact level of these Fibonacci's if it seems to show that it's, that this is where the high was, I believe was right here. So it's just the general area, and then it's to be, okay, so I want to go to 279 even, or close enough. All right, so we'll call it there. So there's the 10-day. Now let's see what happens here. We'll look on our 1 minute first, our ATR and our fib. Our fib's at the same level as the ATR, so it's not helping us any here. And that's one of the reasons this strategy came in with a 2-day 5-minute fib. So we might get a tighter level here. Let's see what happens. I mean, I don't know what's going to happen here. So in case you think there's I'm following an exact strategy that was put out, okay? So I'm on the fibs, and I need to go to a 2-day. So there it is. So we'll go low to high. It's an even dollar, which is great. No, I can't go to that. So I've got to go from here to here, right? Because that wouldn't have existed yet. So that's we call it at the 50 cent. That's pretty close. There it is, 50 cent. We're going to get into half and whole dollars, why they're so important in a minute. There we go. We're going to make that a different color. Can already see that it looks like it's going to really help us for channel trading. You always do them on a 5-minute chart. Remember, guys, why do you do that? Because everybody else does that. That's why. So how many people have read that book? How many people designed that book ahead of time? Why they put that data in the book? How much back testing was done? Look at, you can see it's just amazing how well this worked, right? Look at this, guys. Look at this, right? Even here, and then, up here, it kind of stopped it above it too. Not perfectly, because that's a pretty big swing there. But here is like amazing. If you had traded throughout the day, the fib levels just got so respected. So channels, ceilings, floors, right? So if you just took that trade and you got out as it started to dip, you waited for it to hit again. Maybe you got a little scared here, but then you held on to it and you got out as it started to dip either here or here. And then you took it again when it got down, all the way. You waited for that. And then maybe you held on because you're green. Maybe you're not going to get shaken out at the first time that it went back. Maybe you're going, I've already made some money. I'm holding. I'm going to get ready to get out somewhere where it had been getting out. And it probably would have got out right there. And the reason why I would have got out right there is because of this. I would have marked an intraday historical data that it's kept stopping, and that would have made me think it was really doing the same thing again. So I would have missed the total move. But, I don't want to be unfair and say I would have held it all the way up. I probably would have got out right there. And that's a lot of money. You make a lot of money already trading the stock. So do the fibs help? Yeah, absolutely. In this strategy, can we go back to the basic, like what the heck am I showing you here? Yeah, let's do that. Basically, I'm finding you a range of a high and a low, and I'm picking a big stock, showing you how to find those big stocks, the criteria, that it has to be over $25 billion market cap. And, you want to set your scanner so it hits it, but you can make a watch list, because pretty much you're going to miss some stocks if you don't have a scanner, but pretty much the same big boys come up day after day. You find their range, you make sure they're consolidating and not breaking out, and then you trade either just long and get out or long and short, which is better if you feel comfortable doing short, as long as you follow your day trading plan and you get out. This is the key to success. This is how simple it is. What's hard is you obeying yourself and getting out. What's hard is making the share size low enough and not going for all the money so you can maintain the distance of the channel without jumping out of the trade. You will see day after day that the stocks do the same thing. And if you just know what a breakout is, walk away, unless you want to take that chance of riding at the direction, which is fun, But if you want to make sure you put money in the bank day after day, this is what you do. Now, will it work on cheaper mid-cap or large-cap stocks that are cheaper? It does. It does work, but not as well. It doesn't work as well, guys, because it takes so much to move these mega large-cap stocks. They're consistently retracing. That's the beauty of it, right? So you want to find a bias, like you want to see what's it supposed to do today generally. And there's a lot of ways to look at that. And you may or may not be right, of course, when you figured it all out. There's no guarantee. But if you follow the right things, generally the bias is going to reflect what your studies showed. Or when the trading starts to go, look at Apple back here. So Apple, when it started out way back here, I would have called a long bias. So anywhere in here, I would have mostly focused on taking trades going long, not short, because I would have thought if I was wrong. Now, this is if you're trading the hare, not the tortoise, because you've broken out. You're not all the way out, but when you pass that half ATR, that's considered a breakout of this type of consolidation strategy, right? So now you're trading like the hare or a scalp and recoil. You want to have a long bias here, because if you got it wrong in here somewhere, like this happened, you held it. You're like, okay, God, I'm at my max loss. Oh, I waited too long. That's a mistake. You shouldn't have waited too long. But I believe it's going to go back up. I held it, and then look what happened. It came back up. So again, I made a mistake. Oh no, I went long here. Oh no, oh, it came back up. And same thing. It just keeps doing it. Look at how it respected that fib. Stopped it here a whole bunch of times. These would have actually been pretty easy trades to call because of this fib level. Again, once you see it being respected within a few cents, remember that, and it can help you call your bias of which way to go, short or long. All this stuff, I haven't even got into the detailed indicators that actually make it much more simple to call the trades. This is just a big look at how you can count on this day after day after day. When I say count on it like 80% of the time, 90% of the time, I don't know. You do the math. You look at the back testing yourself. Don't take my word for it. You should learn how to back test. You should learn, to make sure that what you're hearing on YouTube actually comes to fruition on the charts. Let's move on. We'll go to AMD now. One of my favorite stocks to trade, right? So let's see what it looks like now. On the 1 minute, boy, do we have some consolidating action here, okay? But it broke out again. And this is sort of the volatility of this market, is that it's making big swings outside of its normal ATR. So you adapt the way you trade based on the more and more information I'm about to share with you. So again, this broke out immediately. This would have been great to trade at the open strategy, day trading volume 4, or whatever strategy you use for breakouts. This is would have been some nice money here. But now you see how it rejected off the high a bunch of times. It told you, like, get out of the trade or go short. Now we don't have the fibs yet, so we're going to see what happens. But just on the ATR, which is the most respected level, right? Unless you're getting into finding the 150 and 200 moving averages. I think this is the 200 down here. Yeah. And it's right at the ATR low. Wow, that would ever so seriously be respected if it went down there. But it didn't. And that's way down at 179 bucks. Let's look at the numbers this moved. I mean, this is huge, right? But anyway, let's take the fibs on this, and then we're going to go a bit further and show you a bit more of how to make it so you really, almost guaranteed to get the trade, to get the right trade. So I'm on it. Did I just open a 2-day? Or is this a 10-day? No, this is a 2-day. No, this is a 10-day. Okay. So let's get this marked. So I'll go to the 50-cent mark. 260.50, right? So I'm looking to the right. That's where the price is. Close enough, 53. And then I'll go down here to 80. We want 87 even. There we go. So there's our first fibs. Let's see what that did on the 1 minute. It helped a little. Kind of gave you parameters if you were going in the wrong trade, but that's a huge gap. So not of much use, right? Not of much use for us. So let's go into too big to hold that trade. You got 100 shares, you're holding into $500 the wrong way maybe. So let's go for the 2-day, which is why the 2-day was invented to do this. We'll start again at the 187. Oh, I can't take that. Okay, so I got to be careful not to look at the day's action. I almost got tricked into that. So this would be the high, I believe. Yeah, this would be the high, and that would be the low. Okay, so let's see. I'm trying not to overcomplicate it, guys, but I don't want to cheat either. I mean, I don't want the things to be wrong data is a better word than cheat. Okay, so, oops, 87 again. So we'll edit this. We'll make this. How close are we to the? No, I have to keep that. It's too far away from the whole dollar, so I'm going to keep it where it is. We'll make it pink. Now let's see what we get on the 1 minute chart. Okay, things are looking a little better, but we don't have anything up here, which is a problem. So we have some support here, but no place else. So now let's do something that maybe will make this a tradable stock to do more of that hair kind of. We've haired up here. We've zoomed up onto a breakout, but then it became an RV or a tortoise again, right? Then it became a consolidation. So you could mark an intraday level right there, but now it's only going to come into play way over here. You could have marked it here, and it would have come into play a whole bunch of times. But there's another way to find that, right? And we go to the 5 minute 10-day again, and we mark what we call historical data. Now, when we look back on this, we would have looked, the stock would have been opening here, so we would have been looking and marking levels over here, and I'll show you what those are about in a minute. But because we know that it's way up here, I'm only going to mark levels that would have come into play up there, which we would have continued to mark throughout. So let's zoom in here a little bit to just unfortunately, there's not a lot of, this isn't a good stock to do the historical data on either, because it's just moved so drastically down and then it's backed up that we don't have enough data over here to do this. But what you would do is, without me looking where these are going to end up, is you would mark where the stock abruptly turned around. They call this historical data, right? Which is everything really, but you call this historical data, and you look for like tweezer moves. It went up here, and then it abruptly turned around. So you'd mark that level, kind of smooth it out a little bit. And then the fib's already down here, right? So you'd probably mark this level where it made a flat top. This is historical data level. You can see it respected it here, and then it flat topped here. You get to see this because this is already closed from previous days. So you're okay to mark this. Now I happen to know that I'm just not going to mark these. I would mark more, that we're out of the price range, and I probably would have marked this up here too, somewhere in here, smooth level above the fib. Now let's just see what that did for us over here. So now we marked historical data, particularly tougher one today, not giving us a lot of data. We have one more trick to help us zoom in on these. Why is this not working? There we go. One more trick. And that's the half and whole dollars. People trade. Remember, you're trading with the crowd, like the 90-year-old woman asked, like, how do you know? Because people make your historical data, your Fibonacci levels, your ATRs, they make them come true. It's the same with even and half dollars. People love to remember to trade at those levels. So they go in at those levels, right? Or go out at those levels. So keeping that, understanding that is so important. So this is just a breakdown of, the basic stuff that you're going to want to watch for. I can already see that the 209 level is really, really close to where it turned around. There's 209.10, 209.7. There is close enough. Look at that, guys. Whole dollar. So as you saw this coming up, you would have said to yourself, it's starting to go down. It went down off the whole dollar. I'm going to write it down to our only remaining historical level. Unless, of course, now let me do something different just so it's quicker. And you don't have to do this. You can draw all these lines. But there is a way to do this quicker. There is a code in here that does every single stock, no matter what you open, whole and half dollar indicator right here. Again, they put it out. The $1 Million Margin Club has the best indicators. Okay, so the only problem is that we're out of its price range. It only goes $10 up. But so what we'd have to do on this particular one is, no, not that. We go into the indicator. What we're at 208 now. So we go into this indicator and we put the price up to 208, and that's a little trick, because it only marks $10 from the open, and this was a breakout. So now we're going to put 280, and we're going to apply, and it's going to move these lines. Oh, wait a minute. I'm sorry. I didn't want 280. I wanted 208. Oops. See, it moved way up here. All right, let's do that again. All right, guys, you get to see the messiness of it going on here. But maybe that'll help you learn. Okay, so there we go. Now we apply. Now we're right in the middle of the whole and half dollars. Now, what a mess, right? You'd say to yourself, what a mess. But that's not how you're trading. You're trading with this big, wide opening. In fact, you're trading, really into something like that, and maybe even tighter. So now you've got your historical data, you got your Fibonacci's, you got your ATR, and you got whole and half dollar levels. Look at how that half dollar was respected time and time again. Right? And then the whole dollar. And that right there is what they call a tombstone pattern. It's an absolute rejection sign. So when that happened, you knew you had a double reason to get into that. Again, back to that candlestick pattern playbook. This basically said, this is going to turn around. Some people, it's almost what they call an abandoned baby, upside down rickshaw man, whatever you want to call it. It's a reversal sign right there, because it spiked up there to that high price, but most of it ended up down here. So it's kind of showing you, no, it didn't like it up there. Oxygen too thin. So you hit the whole dollar mark, right? And it bunched up there. So after that first spike, as it dropped below that, more reason to get into a short right there. So you learn these little tricks about the consolidating RV turtle type stock. You get into the micro of it all, and you're able to call the future literally by the more data you have. And I'm going to stop with the amount of data I'm going to give you right now, because I don't want to overcomplicate this. It's probably for you that if you're a beginner, it's probably already overcomplicated it. But I just wanted to get into the strategy that changed everything, the strategy that if you just focus on this one strategy, my belief is you will make money, you will make a living if you just knuckle down and look at the way the hare and the tortoise, the RV and the hare move. Look at how it happens day after day, trade after trade. Let's go to, say, Palantir. I have to zero out this before I switch. Oops. We'll look at a couple more, guys. So let me get this zeroed out. Say, okay, apply. Okay, and it's going to take it back to the open where it should be. And let's just see. Okay, so this is good. So this actually consolidated much more. Palantir, look at how it stayed so close to when it opened. This is the opening from the pre-market. And look at how it stayed there. Look at how it respected that ATR, guys. We almost need to go no further to tell you this would have been a fantastic stock to trade and make money on based on that RV tortoise type strategy where you're using okay, it went further away as we zoomed out, but still hit it right there. But now you've got look at that whole dollar right there. And by the way, the 5s and the 10s, even more respected. That was a 135. Hit it again, right? Up here, what did it hit? The 137, turned around. Whole and half dollars. They're the next thing after ATR, Fibonacci, historical data, then whole and half dollars. ATR, Fibonacci, historical data, whole and half dollars. 4 key things to calling your trades time after time after time after time. You can get into now more like EMA crossovers, the MACD, or the buy-sell oscillator that works on relative strength index. There's all these other indicators you can get that verify how to do this. But I'm going to show you one that you would have to purchase, because remember, I haven't been zooming in down here to tell you what happens on volume a lot. Let's just take this. So it rejected right at that. Remember, it might not be exactly, so you want to watch close. You'd assume if it's within 5 or 10 cents, it stopped. So jump back on when you can. Now, look at the volume. And if you have the right indicator, this is the volume down here. We haven't stressed this a lot because it's mostly for momentum trading, but it also comes into play for this. Look how it was verified by other people. Look how many from what was happening jumped on that trade. More and more, you don't really know till it breaks this level. Somewhere in here, it's out of control. It's not stopping. I'm getting on. And then you ride it from that distance, 134, say 80, up to 25 cents up. You probably don't get out perfectly. If you wanted to bail out, you get out here, so you get like 20 cents. Or you hold it because you've got a cushion, and you get the next move. You hold it and you get the next move because you've got a cushion. And you hold it and you get or you could take a little bit of profit and hang on. Different ways to trade. But it all started with it rejected off it stopped going down off the 134.50 with the ATR down there like a solid wall, a floor you can't break through, concrete, really told you 2 ways like this is going to turn around. Then the volume verified it. And when it beat the opening of the last candle, man, take the trade. You got verification that it blew through the whole dollar. So you really could hold that and then ride it all the way up like I just showed you, or take your money and look for the next breakout off the $5 amount somewhere in here, a little bit above it. Because it's above the 9 moving average and the 20, So other things you can look at. What was it like when this share? See, this was higher too. Not a lot, not as much as the first breakout, but so the volume is important too. And I have a lot of videos about custom indicators that might really help you with this strategy, but you don't need them. You don't need to spend any money. You don't need to buy a course from me. You just need to get in, do a little bit of practicing, mark your own ATRs, mark your own whole and half dollars. Do it yourself. Trade on a simulator first. Look at the back testing. Pick out the stocks. What's happening? Is this happening? Is he right? Can I do this? Yes, you can. You can do this. Obey yourself, obey your rules, get out when it's going against you, because that's the human condition that we really fight against. That's the biggest problem with day traders. They make a plan, they make a day trading plan, they practice in a sim, and then when real life comes along with real money, they don't listen to themselves because they feel like the trade's too big to lose or whatever. They say to themselves, it's going to turn around. I know it is. The data says, the professor said, if this shows this, it's going to turn around. No. Maybe turn around. Everything's a maybe, but obviously you're stacking up the percentages in your favor. And that's what this whole strategy was developed for, this whole thing. Now I'll go into more detail in another video about how Strike and Recoil has kind of updated this a bit and for much more short term, and basically teaches you how to scalp more than, a little bit, kind of an in-between the tortoise and the hare, some other animal in there that gets you doing quicker trades on a little bit different, tighter data. When you learn how to scalp, you can then apply it to any kind of trading. That's what's so good about this. So it's just obeying your own rules, guys. But this strategy is amazing, and I highly recommend it. Now, a couple other things. How to find the perfect entry, large and mega caps only. Now, this is going to be covered in the book. If you don't own the book, I'm just going to go over it with you. So if you want to get all the information in the book and not pay for it, I'll tell you that little trick too. I mean, it's good to have it on your desk. But I'm talking about this one book because it kind of has a lot of the bones of what I just discussed, but I went beyond it a bit. And that trading has changed a little bit since 2022. But as far as like the Bible to have, yeah, I would have Day Trading Volume 1. It was a bestseller and still is for a reason. Well, let's go over this. We'll start with defining a perfect entry of a trade taken inside a known range. So we just talked about range. This is the best in a price level that has already been proven, okay? Our focus should be on mega and large cap stocks. We are not looking for momentum or catalyst, like in other words, a breakout on a particular stock, but rather trading a rotation and retracement. That's a great word, right? I'm not even sure that's in the book, but the rotation is the retracement. It's like they're using the word rotate. It's going to rotate around. It's just going to keep coming back. I mean, again, it might break out and not come back, but the great thing about the large and mega cap stocks is they most always come back. So you get to ride that action, right? Unless they're making a big move. So news from the White House could change that. If it happens to be a medical stock, some huge breakout drug, you just don't trade this strategy with that type of stuff. But you go to a different kind of momentum type or scalping strategy. But catalysts are not our friends. Option Fridays are not our friends. You want nothing. You just want the basic stuff. People are just going in and almost they're asleep when they're pressing their keys, when their brokers are just like, yeah, I'm moving that 20,000 shares. I'm doing this 5,000 shares. Or somebody else says, oh, I put in 100 to buy a market. And it's just like every day. The same stuff, not expecting a big move, but they're thinking over time it's going to go their way. They're not waiting for it to go their way that day, not in the microcosm like I'm showing you how to trade. The safety of that is what is the huge thing about this strategy. So the first step is to find the right stock selection using scanners to find stocks with at least $25 billion market cap. Remember, I talked about that. That means they're not going to move very quickly. Trading at least 100,000 shares or more in 1 minute. Okay. That's a scalp and recoil strategy more. That focused, the scalp and recoil focused on this one thing a lot more because getting it, particularly when I trade for like just a half hour, an hour, I need the stocks to be moving. I can't wait for the tortoise. I want the tortoise for the overall move. I don't want it to do something crazy, but I need to kind of move those short 1 minute moves. Pretty good range, pretty good opportunity to get 10 cents, 20 cents with 50 shares, 100 shares, 200 shares. And then you make 10 or 15 trades before you know it, you have $100, $200, $500 a day. Suddenly you have $2,000, $4,000, $10,000 a month. It changes your life. You make a living. But do you want to sit in front of the screen all day? I do, but I do it with different sessions. But you might be limited time, and I'm making a video, and I kind of need to show that entertainment value. So I combined what I needed, and it turned out that it's a really viable strategy, almost by mistake. It was something to explain how to scalp by the strike and recoil strategy. think I always call it the scalp and recoil, strike and recoil, where a snake strikes and you go the opposite direction. You're looking for the recoil. So if it goes up, you trade short. It goes down. If it goes short, you trade up. Because for a short period of time, which could be seconds, you get 5 cents, 10 cents on the recoil. And you get out. You get out real quick. $5, $10, $20. You know, that's strike and recoil. And in order for that to work that way, it has to be moving a lot of shares in a 1 minute period. And how I determine that, we'll come back to this, is I look right here on either the ask or the bid, either will work, and I make note of a certain number, like 65 cents, right? And then I kind of count in my head, is that going to move 10 to 15 cents in 10 to 15 seconds? So if I see it move that fast, then I know it has affording me lots of opportunities to make 10 to 15 cents within 1 minute, and probably 2 or 3 times within 1 minute. So I can quick do that recoil, 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 or recoil, 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 whichever way it's going after it strikes. So a situation like this, when it, even as it was going up, it didn't just go up. It went up and went down, went up and went down, it went up and went down. Strike and recoil, strike and recoil. So all the way up, I could have gotten, taken a profit and gotten right back in, all the way up here. So even in a 1 minute candle, that's what happens, guys. So anyway, I developed a scanner that finds those stocks. You can get it at the $1 Million Margin Club. I think it's like $4. You might be able to find it free on my channel. I think I have it on some of the videos, but it might be worth you just to spend $4. And I have those. I think that they're here. Yeah, let me open this up here. So, professors. Yeah, I think this is one right here. Well, let's just go to one here. So this is 50K. This actually would be a good one here. So let's see what it shows. So all these stocks would have come up on the scanner. To trade. So they're big enough cap, and you can see here on the 1 minute. Yeah, this is the 1 day, 1 minute, what its volume. This is over 50,000. So it shows what they were. But of course, once again, and I hate to keep pushing it like that, but when you're shopping for your stocks to trade, you often will look over here on your day chart, right? And this would not have spoken to a good stock to trade, because you're seeing it's making a big move down. And you're thinking, God, it's just going to repeat itself. I don't think I'm going to be able to trade this. But one of the things you do to see about if you're getting that volatility, you can sit and figure it out. But if you're going through stocks really quickly, I'm pretty sure this is free. If you go over to the $1 Million Margin Club, still, I think they still have it for free. I gotta find it here, guys. Hang on a second. Okay, I found it and I added it over here. This is telling you what the average can. So quickly on the day chart, you can make sure. Look at the volume in 1 minute there. This average over a 10 days, 160,000 per 1 minute candle, 240,000 just in the last day. So it's actually gone up. And where I found that was. Well, I'm sorry. You look for it at the well, yeah. I guess I'm not sure of the name, so let me go back. Yeah, here it is. 1 minute average, 1 to 10 day. There's multiple ones here, but they'll have it over there. I think it's for free over there still. But if not, you might want to get it, because you can go through stocks quickly and just see. Like, I'll start clicking on them. So NVIDIA. Let's look down there for NVIDIA. Look at the volume for NVIDIA down here. That's crazy. Then we go to Tesla. That's going to be crazy. Yep. That's not as much, actually, as NVIDIA. Look at that. Google, barely over the 100,000 on a 10-day average. Apple. So you can quickly just see, like, hey, are these giving me the volatility? AMD is. There's Palantir back again. Hood didn't quite make it over the 10-day, but it's stronger right now. Yeah, there's a lot of news on crypto right now. Amazon, MU is just making it. That's a volatile stock, but fun to trade. So all of these that came up on the scanner is a reason why, because they're all tradable stocks. So that's specifically for scalp and recoil, or for what we were just talking about. This is a good thing to have, you can figure it out on your own or just get one. So 100,000 shares per minute will be trading on a 1 minute. So liquidity has to be present at that speed after the scanner finds the stock. We need to confirm it manually. This means checking the stock moves at least 10 cents up or down within 15 seconds, which I just showed you a minute ago. The second step, context, we need a stock trading inside the ATR or half ATR where rotation is likely. Again, back and forth is likely. Large and mega caps tend to retrace and oscillate within a range rather than trend. This can create forgiveness in our interest. By the way, this is from a book. I'm reciting what I've already learned, okay? The third step is historical price memory. First, we need to use professional strategy and map Fibonacci levels using a 5-minute 10-day chart and a 5-minute 2-day charts. We went over that. These levels must be relevant intraday, meaning price activity intraday within them during the current session. So if your fibs are like way out beyond, probably look for another stock. I mean, there might be enough data to do it, but usually that means a big move has happened straight down or straight up, and you can't connect the fibs anymore. They're not helping you. You're not getting good historical data because history was broken. History has changed, basically. We need to also mark prior stop and reverse areas where price previously reversed direction and repeatedly reacted with sudden consolidation. These levels, or repeatedly react, these levels are often smooth into whole and half dollar prices. So you kind of saw me do that, right? So I think I covered everything here. The quest for perfection, for the perfect entry itself, comes from confluence, not a single indicator. Looking for historical levels aligning with Fibonacci's, whole and half dollars, your VWAP, which you never put up, but moving averages, ATR boundaries, volume behavior, level 2 activity, and recognizable patterns. We kind of covered most of that. The more elements that point to the same price, the higher the probability of rotation. The perfect entry is not about perfect timing. It's about entering with price memory, liquidity, and structure overlap. I haven't read this in a while. This is really good. I got to remember to say it this way. Allowing small, repeatable profits with controlled risk. So it's not about you being so fast, right? It's about the price memory and the structure overlap. Seeing those line up, you have a while to take the trade usually. So especially if you antiquate this to a 5-minute, which you can do it. I feel like a lot of opportunity is missed when you do a 5-minute. That's just the way I trade. But people disagree with me in a very argumentative way on many occasions. So what do I know? Right? What do I know, guys? So anyway, yeah, that's in a nutshell, that's really should give you a leg up on how to just be way ahead of other traders that are still, if they haven't seen this video or haven't read those books, or you're way ahead and you get to see for yourself, not just listen to what I'm saying. I tried to explain it so you could literally go into your own charts and see, hey, is what the professor's saying makes sense? Yeah, there's a reason I teach it. There's a reason I trade it. It makes sense day after day. And you didn't have to pay a dime for the information, right? You don't have to pay a dime to come trade with me, So, I do okay trading. I don't need to get your few cents, to sell a course or whatever it might be. But yeah, check out the data yourself and trust yourself. Learn so you can trust yourself, because like Mark Douglas says, trading in the zone, man, it's all about your confidence level. I have a link to that book too. I would read that book. Tom Hogarth's Best Loser Wins. I would read that book. I have a link to it. These links help me out a little bit, so that's where I get help if you want to help me. But yeah, these in the $1 Million Margin Club books, I'd buy every one. Well, not all their log books, unless they specifically relate to you, but they're 4 main books, So there's 6 books that are linked that, besides helping me out, which would be a nice thing to do, you need those books. Those books will help you. So, and then watch the archives, guys. There's so many videos that are helpful on this channel. There's over 500 and something. I get, you know, marketed to do stuff all the time that I'm not taking advantage of all these people that want me to sell products and do all these other things, and I don't. And you guys get the benefit of less noise. If you can just figure out this stuff, you know, by watching this and just try it yourself, that's the key. Hey guys, you made it all the way to the end of this teaching session. I hope it was enjoyable. Don't forget to watch any of the videos that are linked to this that might help you out with indicators or other information you need. And don't forget to get your free script over at the $1 Million Margin Club. I just heard that it is still available for free. And check out their channel because they have a lot of cool stuff too. Okay guys, thanks for watching, and go green out there and look for the next video coming up.